Bitcoin, sound money, or store of value. Melton would have been incredible on that panel as well. But yeah, so Christina, what are your thoughts based on what Melton just said?
I am so excited to hear her go into the theory, especially around oil and fracking and taking ownership. Our head of market research, Steve Kwan, talks about this all the time and how it's like instilled in the fabric of the global economic engine. So I was just in awe to hear it all laid out like that. I can't wait to go Google some of these things. But yeah, the next panel for Bitcoin, sound money or store of value is going to be very interesting. It's hotly debated, and we saw in the slide, people got to eat, right? So, these are the factors that you have to keep in mind as you're kind of coming up on these concepts of rebalancing your portfolio every quarter. But Jeremy, I wanted to give a quick shout out to our sponsors. We have a few links that I'd like to kind of post here and get folks understanding a bit more around Cryptomatic ATM and how crypto ATMs fit into the fabric of all of this, and point of sale systems and things like that. Also to Zuber, Lawler, and Del Duca, and the legal aspects behind all of it. Genius Network has a ton of legal expertise and many other different dynamics there. Also to Don Tapscott, who gave us a 25% off. It's good through this weekend, 25% off of his Coursera work. So if you go to coursera.org/promo/blockchain revolution, you can get 25% off of one of the biggest thought leaders in the industry. So that was my thoughts there, Mr. Jeremy Bourne.
All right, sounds good. Well, there's a lot going on today. Once again, just as a reminder for those of you who just joined us, we have our G-Tank live pitch competition at 11:45 a.m. Pacific time. We have our VIP networking party. If you're not a part of that, we will give a discount. We have, if you use the promo code CGCI75, just for people that are here right now, you get 75% off to join us at the VIP party with a lot of the speakers that you're going to see today. Be able to network, ask them questions, go to coingenius.ai and go to the events page and you can sign up right there. But yeah, there's a lot going on. And then day 2 is really about the educational breakout sessions or the labs that we've discussed, which is specific topics and a deep dive into those topics. So if you want to know more about masternodes, you want to know about staking, the future of Bitcoin, some of the brightest in the industry are going to be leading those. Really excited about that. We'll tease a little bit more about that, but you can also sign up on the website for day 2 and also use that code to get a 75% discount for day 2. So pretty exciting stuff. So we have about a minute left. We can go ahead and get this underway.
I'd like to give a quick shout out to Team Genius, who is doing all the work behind the scenes in the green room and getting everyone coordinated. So it's really the magic of Jeremy and I sitting here, and everything just happens to work out great on screen. So thank you to Carl Meyer, thank you to Steph Bruhan, thank you to Michael Hewitt, and thank you to Gary Vartanian. While I'm at it, I'll give some shout outs to the rest of Team Genius. Thank you to Head of Market Research, Stephen Kwan. Thank you to CTO, Russ Wilcox. Thank you to partner, Brian Feinberg. I'm forgetting folks. I'm sorry, there's so many folks here. Thank you to our data scientists. Thank you to our data science interns, Harshita Didwanya and Kinjal Parhi. You guys are amazing. I learn every day from you, and you guys are the real rock stars. So we're just really excited to bring all of this to the community. And yeah, we're going to dig into Bitcoin and really analyze every layer of this, you guys, especially when Christian gets a hold of this one. I'm excited.
This is going to be good. I know we're trying to get them on the panelist list. I think Jeremy is here now.
Jeremy Gardner. Jeremy Bourne, are you going to do a Jeremy Gardner introduction?
What's up, Jeremy?
Hey. I'm always ready.
All right. So let's get Christian here.
Yeah, we were all just on the in the waiting room, so everyone should be joining.
Cool. Sounds good. So how's it going, Jeremy? What's going on?
I just moved into a new house again, but this one seems much more promising. So
Good.
I'm enjoying it. My team expanded, quadrupled in the 2 months I moved to LA. So I got a house for my whole team.
Oh, wow.
Jeremy G, does that mean that you're not at Crypto Mansion right now? Because I think more folks need to know about that. I want to do like a Cribs episode at Crypto Mansion one day.
I've done a bunch of Cribs episodes for different broadcasts. I'm calling this a crypto castle in certain circumstances, but it's also the Made Man Mansion because that's my new brand, and most of my team is here. So it's cosmetics and crypto.
Nice. Well, let's get into it. Thank you, Christina. I will take it from here. Thanks, everybody, for joining us. Once again, this is Bitcoin, Sound Money or Store of Value. We're joined today by Alex Marshall, Jeremy Gardner. I believe Matt D'Souza is going to join us shortly. And once again, Christian Kmeyer, thanks again for joining us. Cool. So I'm going to go around the horn just real quick. If each of you can just introduce yourself. Alex, I'll start with you so everybody knows who you are and what you do.
Sure. Hi, Alex Marshall from Bermuda Chain, signing on from the island of Bermuda here. So shout out to anyone that's tuned in. We are a consulting and advisory service in the blockchain space, helping people that are interested in whether they want to get domiciled here in our tax advantaged jurisdiction or just need advice and guidance, whether it's an educational empowerment or if they're just looking to learn more about what to do or how to implement a project that they're looking to do. We help facilitate all that kind of stuff. So all the fun technical guidance.
Nice. So, Christian?
Yeah, calling in from Newport Beach, California, Sasini Capital. We run a venture fund that's solely focused on decentralized software solutions like blockchains. And we've been running the Ethereum meetups here in Orange County for the past 5 years, as you guys know.
Yep, and Mr. Gardner.
My name's Jeremy Gardner, calling from the Crypto Castle, Beverly Hills. I am a serial founder and investor in the space, founded the Blockchain Education Network, Augur, Sava, Distributed Magazine, and Awesome Ventures, a venture fund focused on the intersection of blockchain technology and social impact.
Nice. All right, guys. Well, there's a lot to cover in a short amount of time. I'm going to try to do the least amount of talking here because I think there's a lot of opinions. This is a highly debated topic. Meltem, I don't know if you're still here and around, but if you wanted to hop in, I know one of the people didn't show up, so there is a spot here. I know you have a lot to say as well. But anyway, so this is about Bitcoin being sound money or a store of value. Obviously, we know when Satoshi created his white paper, this was a peer-to-peer payment system specifically. It's evolved since then, and a lot of people are looking at this as a store of value, as a hedge. I tend to categorize it similar to Dan Held as a speculative hedge at this point. So I think it's subject to volatility. When you see things like the VIX rise, it's inverse correlation, and a lot of our data science team is looking into this, and we're going to show off some of that a little bit later from a trading perspective. But I just want to turn it over to you guys. I mean, let's just make a basic statement in terms of your viewpoint, your opinion. Is Bitcoin at this point sound money or a store of value?
Neither.
Okay, Christian, we're going to start with you. Go ahead.
Well, you know my typical rant in this context, right? So I think it's very important to understand what quote unquote money is today, right? And so obviously it's something different to most people in a way. Whatever you've been indoctrinated in, whatever culture you grew up in, money is something different. i.e., if you grew up in the United States, the first thing that comes to mind when you think of money is the printed US dollar note, most likely, and the US dollar symbol being the most recognized symbol in the world is universally recognized as a symbol for money. That's why you see it everywhere. But then also if you introduce another person, right, then money is whatever these two people agree upon. That's kind of the essence of money. It's an agreement between two people. Because if you and I agree that between us trading Pokemons are money, then Pokemons are money. If we choose US dollars, US dollars. It's just that we default what the government has introduced into the society because it's simply easier, because I don't have to explain to you what a dollar is worth if you already know that, right? And the more important thing in the context of like the peer-to-peer cash system is, obviously, we actually never achieved that goal. What I mean by that, there's certain functions that cash has right now. So cash is your typical physical bearer instrument. I give it to you, I don't have it anymore, you have it, there's no transaction fees involved, and I didn't need to disclose what my name is. And needless to say, Bitcoin actually never fulfilled that promise. And for the past 5 years, I have put out this call to action. It's like, if you start using these metaphors like mining Bitcoin, then please also introduce a minting function. Right? And that's still missing to this day. And that's why money is kind of a vacuous term as a starting point. And then also oftentimes it's conflated with currency. Currency is a system, money is a technology. So the term cryptocurrency has not done the space any good because it caused more confusion than anything else. So Bitcoin uppercase B is in a way the currency. Bitcoin lowercase b is not cash, it's the mining reward. It's a network function, right? So these are some of the basics. And obviously, as you know, Jeremy, I can go on for the next hour, but I'm just going to hand it over to the next person at this point.
Jeremy, what's your response to that?
Look, I think as Christian said, anything can be a form of money if you make it money. I mean, that is the beauty of Bitcoin. Bitcoin today does not fit our description of what 99.9% of people consider money to be, which is a government-issued currency that's backed in one form or another and relatively price stable. There was something inherently beautiful about Satoshi's vision of a peer-to-peer electronic cash system that disintermediated banks and governments and really created a sovereign form of money for the individual. But frankly, unless you are like crypto anarchist or hardcore libertarian, a money that has the volatility that Bitcoin does today, or even a money that has the volatility that gold does today, which is about 15% annualized, is not really a feasible alternative for your daily transactions. That being said, as Bitcoin becomes more and more of a store of value, it grows in value and people begin to trust it more. The longer it's around, the more they'll trust it. Then as we see market capitalization in the high trillions, not like 1 or 2 trillion, but something similar to gold or more, I think you could see it really becoming a legitimate form of digital payment. Do I think people are going to ever use it in stores? Probably not. But I think its applications as kind of like the gold standard or the digital dollar for the world, or at least backing the digital dollar of the world, could certainly happen. But I think focusing right now on making sure it's an accessible, well understood form of a store of value is a much more feasible objective than trying to sell it as a form of cash, because it's just not as good as cash in the most basic sense, which is it's not something that's reliable or stable today.
Okay, great. Alex, what are your thoughts?
I mean, yeah, I definitely agree with those views as well because of the volatility issues that you have with it. I think it's a great store of value and it's a great hedge and speculative asset for people to invest in because we're still in the very early days. Even though people may say, oh, it's too high in price, we don't have enough market cap in it to even justify saying that it's high in price. The speculations on price vary from the different people in the industry, but you look at it as it's definitely somewhere that I would advise it's a great hedge, maybe not putting all of your financial means in it, but I definitely think nowadays, especially with the Fed printing trillions and trillions of dollars and it being an anti-inflationary mechanism, it's definitely a place, maybe not Bitcoin necessarily will be the granddaddy. We're looking for what's going to evolve down the line better. There are other cryptocurrencies. There are so many cryptocurrencies out there that you have to do a lot of research and check because there are nefarious projects. So you need to make sure that it's not anything like that you're going to be investing your money into. You want to always make sure that it's a stand-up token project that basically is something that's worth your time, that has usability, has function, that people will be able to transact with every day. Those are more the projects you want to look for. But if we're just talking strictly about Bitcoin here as the granddaddy, yes, better things will come along. But I think for now, at least for people first getting into the space that haven't learned too much, it's definitely a great first step for looking as a means of transfer of value. So.
Nice. So Christian, I'm probably going to misquote you and you're going to correct me as usual, but that you usually say the number of cryptocurrencies that are needed is anywhere between 0 and 1, right? So can you elaborate on that a little bit?
Sure. So yeah, I mean, if you want to improve something, you need to first understand where the technology is today, right? So what is money as a technology today? And that's mostly databases, right? And more importantly, let's look at your typical checking account. Your checking account is basically a DLT, right? So you have a ledger at one bank, I have a ledger at my bank, you send me $100, your bank adjusts your ledger, and then if I'm lucky, my bank adjusts my ledger in between. It needs to reconcile with the Federal Reserve systems. And so that's what money is for the most part today. 97% of all money is digital. And also I think it's always important to point out who creates money today, because it's not actually the Federal Reserve that creates most of the money, it's the commercial banks. And so if you're creating new money, you want to pay attention to what you're creating it for. And for the past couple of decades, what we focused on is creating money for things such as mortgages and loans to education. And so inflation of the whole monetary system is a secondary effect to the primary effect of inflating these particular asset classes. So inflating the housing market and inflating education. The secondary effect that we're all suffering from, that we have larger money supply in total. But this money supply is purely digital already. That's why when you hear discussions about like central bank digital currencies, they're obfuscating what they're actually trying to work on. And if and when we actually have digital cash that's backed by a government or a Federal Reserve system, at that point in time, that's probably going to become the main unit of account in this particular context, right? Because the unit of account is just that. It's just the symbol in your database at this point in time. So if you realize that, then you also realize that you need to implement the legacy functions that people have been learning for decades and still do today in business school are just utterly wrong. You don't want to conflate the functions. What I mean by that, typically, if you went to business school, you got the typical Audubon's definition of what is money. It's a store value, unit of account, a medium of exchange. Well, the medium of exchange has defaulted to bytes a long time ago, for decades now. And no one in their right mind uses fiat money as a long-term store of value. It's typically the amount that you keep in a checking account that you want to spend within a period of time that you can foresee. You don't keep $1 million there, right? As a rule of thumb, because it's inflationary in nature. So we have indoctrinated people to treat fiat money specifically as a form of payment that you kind of want to get rid of, but the representation of values other than your checking account, what you see in your savings account, or what you see in your mortgage account occurring, that is a whole different animal, right? Because in that particular case, I don't mind that inflating, right? As long as what I'm receiving is still the equivalent or higher of what I need to be paying. I'm gonna stop here because I tend to be able to rant about this for half an hour because we've been doing this for 5 years at this point in time, but maybe I'll hand it over to Jeremy.
Alex, Jeremy, what are your thoughts on that, or any responses from what Christian is saying? Do you agree with this statement about there needs to be basically between 0 and 1 cryptocurrency that actually exists and kind of as a function of money?
No, absolutely not. Bitcoin is like gold, and it's going to be like gold for a long time in terms of its value as money. It's floating, it's volatile. It's not if we're talking about Bitcoin as money, Bitcoin is not going to be a good money unless you're on the dark web or you're trading between friends, or like buying drugs or something. It's not like a reliable form of money, and it's not going to be a reliable form of money for a long time. That being said, stable coins are absolutely fabulous, and I think they are going to play an increasing role in the crypto economy, simply because they are, not tied to governments, but they are forms of digital cash. And I think they're going to be different stable coins used for different purposes in different regions of the world. And then you have a handful of utility tokens that make a lot of sense that aren't exactly money, but serve some sort of mechanism, including payments. And so I don't think you can be an absolutist here when you're in a highly nascent new economic environment. I think you've got to play around, and sure, the Schelling point may eventually be one currency, but we're nowhere near reaching that point.
Yeah,
JB knows why I'm smiling, right?
Yep.
I call
Alex, what are your
stable coins
thoughts?
intellectual time travel.
Yep. Alex, what are your thoughts on that? You're shaking your head.
we're going deep, hard, and fast. So that anyone that may not that's trying to learn right now, that's first getting into this and like, oh, what is crypto? What is Bitcoin? Anything? I definitely would recommend, because this is like a deeper level stuff. You're kind of crash coursing in at a very deep level. So I think go watch something like Banking on Bitcoin if you don't really know what it is, because that's a great resource for people to start building. That are novices that are first, like, this is their first conference or things like that. But we still have the inevitable tidal wave of institutional money that's still going to come running into crypto. And if you look at it, the first they laugh at you, they mock you, and they say that it's nefarious or there's something wrong. So if you look at like JP Morgan, and then they suddenly turned around, and then now they can't beat us, so they join us. So now they have the JP Morgan coin. If you look at just this week, there's all this the news that's around Venmo and PayPal that are potentially going to be jumping into crypto as well. So like, these are people that have been totally anti crypto, blockchain, Bitcoin, and now they're joining us. And like, the proof is in the pudding. Everything's cyclical. Currencies are cyclical. The US dollar was not always the most powerful currency in the world. Before you had that, you had the British pound, you had the French francs, whatever it is, back through history if you go back and do your research. But now we're looking at this evolution of the digital currencies, and really I think it is the ultimate end all be all for the next generation. And we're still way ahead of that tidal wave. So right now, if you're looking at it as an investment, or if you're looking at it as a store of value or somewhere to put your money, because like what Christian was saying, you don't want to just have it in one currency like US dollars, because there's no point. You want to be the fastest horse, and the fastest horse in this race is Bitcoin right now. It's the best performing asset of the last decade. It also, I mean, we're not even at the all-time high yet. Like we still got a long way to go. But yeah, so ride the tidal wave, ride in before the tidal wave, or get crashed and left on the beach, kind of is my attitude to it. So I think a lot of people out there should definitely be looking to put this in their portfolio.
I mean, I think that take is kind of preposterous, because on the one hand, you talk about institutional money, and when I don't give a damn about institutional money, they can come in when they come in. I think it's unimportant to the development of this in the short to medium term. I think it will eventually come. But then you talk about the next generation. What digital currency is the next generation using today? It's not Bitcoin. It's Z-Bucks on Fortnite. Your Gen Z is native to digital currencies. They have no issue using different digital currencies for different purposes, which goes back to my point. You know, we live in the next generation, the Gen Z, and then the generation after that, are internet natives. These guys are super familiar with digital wallets, online transactions, digital assets. I think you guys are taking kind of a boomer point of view that we have to have one currency because that's easier for people to understand. You're forgetting that, you know, that for most young people that are online, playing games, using currencies in games, trading assets in games, this is totally native to them. So limiting our scope as an industry to a single crypto asset is somewhat foolish if there are other assets that can create value and provide value to users, which we've seen in online games. And I think we'll continue to see with things like NFTs, which you guys may not be grouping in with bona fide cryptocurrencies, but they are crypto assets. And I think, testing and experimenting is a very important part of this industry's journey, even if it does eventually settle on Bitcoin.
Christian, what's your response to that? Because I know you're very familiar with NFTs.
Yeah, I mean, the whole stablecoin thing is obviously its own topic. I think we have another session on that, or we had one yesterday. I call it intellectual time travel because it's, again, the conflation of function, right? The default medium of exchange is just bytes. People keep referring to things like Bitcoin as medium of exchange. That's just wrong. The default medium of exchange is acronymous bytes. It doesn't really matter. It might be an entry in a database or an entry on a blockchain. That's really besides the point. It's how fast it moves, and I can make my fiat money move as fast or as fast as my Bitcoin if I have the right tool for it, right? So the point here being is you need to implement the technology correctly. And again, it's very important to distinguish between what's currencies and what's money. Currency is the system, money is the technology. And you need to implement all these functions separately, because even the kids that are now digitally native, and I came here 20 years ago because we bought a company out of EverQuest. So we already had in-game currencies with US dollar exchange rate 20 years ago. That's kind of how we got into this particular topic. But obviously no one is gonna go into the store and pay with their gold coin from their video game anytime soon. So the overall utility at the end of the day for most people is that of payment, which means the acceptance in the ecosystem wherever you live. Yeah, sure, if you create your own island and they accept one particular form, that's fine. But maybe one thing to point out, everybody on this call knows obviously that things like Tether are the third largest quote unquote asset by market cap. I wouldn't necessarily call it that, but let's stick with that. And you know exactly what its utility is, right? It's for traders not to leave a centralized exchange, but they want to go back to the unit of account that they feel comfortable with. They're gonna go back to base, which in most cases is the US dollar. That's why the velocity of something like Tether is 90 times that of the US dollar, but within this confined environment, nowhere else.
Definitely. You have to really call it money, have to be something that's going to be widely accepted. And right now, Bitcoin and no cryptocurrency out there is currently at the state where I think you could call it money. I think as it evolves eventually, maybe, but you're going to have more mass adoption before anyone's going to be able to just say, oh yeah, do you want to use this? I mean, you can go out there and you can get a card right now, which you can preload with whatever cryptocurrency of your designation, and then you can go and use it, and they'll do its exchange and use it to buy a cup of coffee or whatever. But for actual people to start recognizing that and businesses to start utilizing it and accepting it, like everyday retail, just on the ground, mom and pops using it, we have a long way to go. But there's definitely a lot of upside in the future, I think, for it. And with central bank digital currencies and things like that, and different stable coins that people can trade against, that's great for, like you were saying, for being if you're a day trader, stuff like that. But yeah, you really need something that's going to be interoperable and you can be able to be widely accepted before it's going to be an outright everyday use of money. So yeah.
Yeah, Alex is touching on one of the most common fallacies in this space, which is kind of the battle cry for cryptocurrency adoption. What I mean by that specifically, to make a metaphor, people did not adopt voice over IP. They adopted Skype. They adopted WhatsApp. So if you ask your mom, have you ever used voice over IP, she probably doesn't even know what that is. So the point here being is, as technologists, what we ask from our startups is adapt the technology to the user. Stop expecting that users will adapt to your technology. That's backwards, right?
Yeah, we don't look at what all the mechanical work that goes on behind the scenes. People really care about results. So they want to pay for something, it works. That's really what it is. And when it gets to that point in the industry where people can do that, then they don't have to think about what's going on to make it happen. That's when you'll really be able to call it a solid form of money. Otherwise, right now, it's just a speculative investment and store of value.
So real question is, and this is not financial advice, obviously, is Bitcoin a part of a solid portfolio distribution?
I think it's a very good hedging necessity for people, in my opinion, if they want to hedge against inflation right now. So I'm very strong. So.
Yeah, I agree. So when people ask me, I tell them, depending on your level of threshold of pain, put in 1% to up to 10% of your net worth into it. But yeah, I agree that the exposure should not be zero. I wouldn't recommend going pump, which is 50%, I believe you told me. But I think 1 to 10% is probably within the margin of error if and when it goes to zero, right?
Yep. Jeremy?
What was the question? Sorry.
Is Bitcoin a part of a good portfolio allocation, right? Is this
it's a necessary part. If you're over 40 or have a family, you know, maybe 5 to 10% of your investment portfolio should be in Bitcoin and maybe Ether at a bare minimum. And the reason for that is that it's a hedge more than anything. if you have a bunch of equities, bonds, treasuries, whatever, Bitcoin, while it may appear correlated in the short term, over the long term, Bitcoin and Ether will not be correlated to those other investments. If they go to zero, it's only 5 to 10% of your portfolio. But if you look at their price history, they have an outsized likelihood of at least one of them being hugely successful, if not both. And what I tell young people is you should have if you don't have liabilities, you don't have family, you don't have, you have more room for risk and more time to make up. You probably have a small investment portfolio to begin with, but you should have at least 25%, if not something like 50% of your money in crypto assets, beginning, as I said, with Bitcoin and Ether. It seems like I'm with some Bitcoiners on this panel. I've been in Bitcoin in a serious capacity since 2014. Tried to build my first startup on it. But as someone that was not able to build my first startup Augur on top of it and had to build on top of Ethereum, I know there's a place in the world for Ethereum or, a smart contract blockchain. My bet would be on Ethereum. And so I tell everyone, actually, the reason why I got distracted and to answer your question was because someone asked me if they should buy XRP, and that just triggers me. So I immediately respond.
That's another panel.
Let's not touch on any scams. Right
yeah, that would look. XRP is the best investment I ever made. I mean, in 2 years, I think I got 2,000x on my return, or 1,000x on my return. I mean, it was fairly unprecedented, but it's not a good investment. But I think everyone should own Bitcoin and Ether. Excuse me.
Okay.
And young people really have so little to lose. They've got the rest of their careers in front of them. We're talking about the money they're planning to invest anyway. I'm not saying to put your life savings in, the money you spend on rent or healthcare, but the money that you're planning to invest, like, forget the stock market. It's such a scam. Yeah. Talking about scams, there's no, it's totally become detached from the economy. So now that the stock market is about as irrational as Bitcoin is, there's no reason why a young person shouldn't have 25 to 50% of their money in Bitcoin and Ether. And then I tell them to explore and actually do research and educate themselves. And as they get more comfortable, I think there are other interesting crypto assets, but BTC and ETH are just straightforward, something that every single person should own at varying scales depending on liabilities and risk tolerance.
Absolutely agree. Absolutely
So,
agree.
JB, do we have time for a chat question?
Yeah, so I was actually going to read that just after this comment because we have a little bit more time. I think we have to stop at 10:25, so we have about 11 minutes left. So the point I want to make right now was,
question.
What was that?
How about we take Oscar's question? Are central banks printing money or printing currencies?
Oh, I didn't see that. What's your answer to that?
Yeah, so it's important to understand, again, currencies are just the system overall. Money is the technology in specific. And even though the Federal Reserve systems are quote unquote printing and injecting money into the system right now, it's still being outweighed by how and why commercial banks are creating money, right? That's by far most of the money that's being created. And that's really the systemic issue, because if you're creating money, you want to put this into something that's productive versus non-productive, right? If I sell the same house over and over again and just has a higher price sticker on that, I didn't create anything. There's no more productivity. If I make education more expensive, there's some professors and or schools that are getting paid more, but it doesn't do much for the overall economy. If anything, it's hurting it, right? So I think that's the more systemic problem that we need to address, that right now in the Senate and Congress is not actually being talked about. Even the Giancarlo proposal about CBDCs, which is mostly very enlightened, kind of sidesteps that particular issue for the most part. As long as you don't address that, you're not addressing anything. Inflation is going to keep it incurring if you allow commercial banks to create money from nothing for something that's non-productive. So that's the main crux that for some reason there's no discussion around.
Yeah, I want to circle back to what Jeremy was saying a minute ago as well about, because we have the big wave that's going. Like, inevitably, if you look at the economy and where we're at, we're looking like the greatest depression of our lifetimes, and the, like 1927 scale we're talking about, like more than 2008. So, I mean, if you're going to be getting any cryptocurrencies, in my opinion as well, I think definitely Bitcoin and Ether are the best, because I always like to, when I talk to people, I tell them it's kind of like Coke and Pepsi. You know, they're the two front runners, the most pop culture around them. And a lot of people won't do the research and do the in-depth looking into projects to actually go and find the most quality token projects that there are. So realistically, it's going to be like when Beats by Dre came out. They were literally plastered everywhere. Everyone heard about it. Everyone saw it in all the videos and everything. And naturally, people started buying them. They were not the best headphones on the market, but they ended up being one of the best sellers ever for headphones. So the same thing is one of the reasons why I think the people that don't do enough research will also automatically go to just the top coins. And if you look at Ether as well, the Ethereum network has tons and tons and tons of different projects that's built on the back of it. So as some of those projects come to fruition and actually start to be actually very profitable and working, and the use cases come to fruition, you're going to see that that's also going to help evolve the Ether to be a more valuable asset than it even currently is. So those two really are like the front running horses, I think, that anyone should, not investment advice, but in my opinion, you should be looking at those in your portfolio, definitely. And I'd even say so if you, of what investment portfolio, you also want to look to have a smaller, you don't want to be like 50%, or have the majority Bitcoin, Ether, and then if you're risk adverse, have a mix of other altcoins that you've done steady research in and you really like. So I mean, that's my opinion on the space.
So pivot a little bit. So obviously, I think this was mentioned before. So CVS, 7-Eleven, I think PayPal, Venmo, like all those ones, right? We're talking about integrating Bitcoin in some capacity. We're moving towards mass adoption, but at the end of the day, this is an additional option to the current offering, right? Is that enough? And if it's not enough, really, I think it comes down to, Bitcoin's an option, but we still need the educational piece as to why it's important to own. And the vast majority of the world just has no idea as to the benefits of why they should be owning this additional feature, which is Bitcoin. So the whole point of this conference and the title is the road to mass adoption. So let's talk about, and we're going to get to a few questions here, so hold tight there. What do we need to do, and what are the companies really leading the way to help with the educational side of things? I know, Jeremy, you're doing some cool stuff on the education side, but what are the actual tools and projects that are helping push us towards mass adoption? So like you said, Christian, it's all about, like, we don't need to understand the underlying protocol of the internet to use the internet. I go to Nike.com and I just know I get there. I don't really care how it works. How are we going to get there, and who's building the infrastructure to facilitate that adoption at that level?
Yeah, so I think there's a huge fallacy here in not realizing that money itself is friction, right? Money is an intermediate representation of some value that just exists in your head for the most part, right? So you actually need to move money out of the system. What I mean by that specifically, you need to move the inflationary nature out of the system. So as in, if you were able to never hold fiat for more than a second when some schmuck on the other end is still asking for something inflationary in return, you wouldn't do that, right? So the kind of metaphor would be if I could shave off something of my asset, whatever my asset is, right? My house, my car, whatever you want to use for that. But only in that instance when I need to pay for something, that would be the most useful utility. And we have the possibility to do that, right? As in, if you would not have to have liquidity in your checking account, because that's kind of the point. You need that liquidity to pay for something to enable your daily life, right? But the whole point of peer-to-peer transfer is create this liquidity. But at the end of the day, you need to transfer it into something that has actual utility in the real world, right? No, I mean, as I said, I stand for everything that Bitcoin represents. I think the most important part that we don't talk much about, it's essentially freedom of speech, right? It's realizing that this is kind of the method of last resort, how you move value, and what could be more an expression of self than how you allocate your capital, right? So it should be protected from that perspective, and it absolutely should exist, but we need to increase its utility, right? So please build a minting function, build more useful things, right? On top of that, it's an open source software system.
I know, Jeremy, you had a comment on that in terms of how we're building towards mass adoption. Then we're going to take a few questions.
Yeah, I mean, look, it starts at a few different levels. First, you have to have the people building the technology. That's what my nonprofit does. The Blockchain Education Network has over 200 chapters at different universities on every habitable continent. And we're bringing young people into this industry. That's important because you actually need people to build the tech. But as Christian said earlier, mass adoption doesn't happen of voice over IP because people are adopting voice over IP. They adopt it because they download Skype. Same thing with blockchain technology and crypto assets. The people that were excited about this technology for the technology have already done it or are young and need to be indoctrinated through organizations like mine. But the mass adoption happens when the technology, like the applications exist that people actually want to use. And so we don't need I haven't tried to evangelize Bitcoin to someone in 4 years, like except in very like certain occasions, like that's not what's interesting. It's about building the applications that make people's lives better. This is something we focus on with my VC firm is, socially impactful technology that improves people's lives. And if we build that technology, the adoption will happen because people are using the tech and they don't even care that it's a Bitcoin or blockchain based application. They just use it because it makes their life better. That's what we need to focus on, not people buying Bitcoin.
Yeah. So I'm going to pivot to a question. We have about 3 minutes left. So JP Technology Group asked if you had to say about $100,000 or $1 million in your bank account as an example, are you saying you would keep it in cash or buy crypto at this point, especially with everything going on in the global economy and uncertainty, the reinfection potentially, especially in the US, we're seeing some tremendous spikes in COVID. Like, what do you do?
I haven't had cash in a long time. It's like perpetually a problem in my life. Like it doesn't matter how crypto rich I get. I'm always cash poor. As the shirt says, hodl. It's just, it really depends on what your liabilities are. Like, if you have a lot of liabilities, you need to have cash available. I've designed a lifestyle for myself where I only need a few $1,000s in my bank account at a time. And that's preferable because, I think 90% or 80% of all crypto price action happens in 11 days out of the year. You don't want to miss the upside of this technology, even if it means suffering through the downsides. I've been through 2 crypto winters now, and yeah, it sucks. Like you put your money into something, and all of a sudden it's worth less. But as long as you have a low time preference, if you have the conviction that I do at least, that in the long term it will be the right place to hold your money. It's great, but I've got friends that are way smarter traders than me. They know, like one of my buddies in February, March was like, sell all your crypto now. COVID's going to wreak havoc on the economy, and he sold everything. And good for him. And now he can buy more cheaper. But frankly, that's not what's interesting to me. It's not about the money. It's about, having conviction in the technology I've kind of built my life around. And so for me, I keep as much cash as I need, often not enough. But beyond that, crypto is a great bet if you have a low time preference, a small number of liabilities.
Yeah. Well, guys, we have to wrap up. This has been an incredible panel on Bitcoin. Thank you, Jeremy, Christian, Alex. If you guys want to follow them, learn more, their information is on our site under the events section at coingenius.ai. Stick around. We're talking about trading next with Crypto Burbs, Scott Melker, Wolf of Wall Streets, and Maddie Greenspan. So that should be a very interesting one as well. Thank you all again.
Thank you for having us.
Thanks, man. Talk to you soon.
Very well.